Value is not always an absolute dollar amount. So if you're going to get a job for $100,000 versus $50,000, a lot of people would take the $100,000 job. $50,000 job might be exponentially more valuable in terms of the clientele that you're going to get to work with, in terms of the people that you're going to be able to train with. But I always believed if I worked hard enough and found a way that I could get there. It's not really where you came from. I think it's your mindset of where you believe you can go, and that's really what I try to get to people. I know you work with a lot of people young enough to rewire their thinking, but also understanding, I think in today's day of Instagram, Twitter and all those things, that success doesn't come overnight. Mine definitely didn't. In this business, probably the first 10 years, I hardly made any money because I was always playing the long game. I think when you do that though, it does come eventually, and the best thing about it,
success is trained. You're not born into it, you're made into it. It's either succeed or die.
I had almost $100,000 in student loan. In the moment, it seems hard. I paid it off completely.
When people give up on their pursuit of what they want for themselves, it's a form of arrogance.
I always feel like I had a deep desire to be great.
Any entrepreneur, go get it.
You fucking want it and you deserve it. Welcome to Take the Power Back podcast. Today I have a special guest, Rob Luna. Rob, welcome.
Hey, nice to be here, Jason. I always like being introduced as a special guest. That's the bar
guest.
Really high, so I can't screw it up.
Right. I mean, the resume that you have is very, very impressive. Not only just from your media presence, but the entrepreneur that you are, the businesses that you built. Super excited to kind of dig into that story a little bit. But why don't we start with you, Rob? Why don't you tell us a little bit about who is Rob Luna?
Who's Rob Luna? I mean, first of all, I'm a Christian, and everything that's happened in my life is, I give praise to Jesus Christ because people who know me, I grew up, when I say poor, like super poor, I say below food stamps because I grew up single mother who was addicted to drugs at a very early age. Wow. And a lot of the time she was even too strung out because you had to do a little bit of work just to apply for food stamps. So She didn't even do that. So when I say poor in terms of U.S. poor, very poor, tough upbringing, but all of those things that I went through as a child really, I believe, contribute to what I've done today. And so you say an impressive resume, and I've got pretty good. I'm a Wharton Fellow. I have an MBA from UCLA Anderson. I've worked with some of the highest net worth people in the world, and those have been great things. But I think the vast majority of what I learned has really been from the trials and tribulations and struggles and mistakes that I made versus some of those accolades that people like to, bestow on me. So I'm just, happy to be here. And, as a product of what was I able to do to kind of create this financial success, kind of what your show is about. And I know you talked to a lot of young people. I took all those things as a kid of how do I feed myself, how do I clothe myself, how do I do those things, and I realized if I could just put those into something that was positive and I could make an impact on people, that would kind of be my way out of that situation. And so it's been through financial services, which is nothing, I thought I was going to do. My family, no one went to college, no one ever owned a stock, no one ever bought a home. I don't think we were in one apartment more than 1 year. So it was a complete different opportunity for me. But one day a ad popped up, I'm old, in the newspaper for stockbroker trainee when I was in college. And that just kind of opened the door for me to go all in on, kind of where I'm at today.
So that kind of like the pursuit of happiness a little bit.
A little bit. Yeah, not too far from that. Yeah, it was just kind of, they used to call them, you don't want to say stockbrokers anymore, but I was pretty excited to be a stockbroker in my early 20s.
So how did that, so let's just go back, right? So where'd you grow up? Where was this?
Yeah, so I was born in New Jersey, but my family kind of fell apart. We moved to Los Angeles at a very early age, right when I was 8 years old, and that was 1982. Okay. And so we lived in primarily Hispanic, very heavily, this huge gang influence during that period of time. I had a brother that got caught up in that. Drive-by shootings were just kind of normal day-to-day activity that was going on there. So Los Angeles, if you do your research during the 80s and early 90s, was not, people complain about it being dangerous today. Nothing compares to how it was then. Friends that got killed. And grew up in Los Angeles and then got an opportunity to, and really the way people would survive at that time and grew up in those neighborhoods was just to get away from it. Got an opportunity, got a partial scholarship to go out to Arizona, which, I never thought I'd live in Arizona. I got there, hated it. It was 100 and something degrees.
Really
I was in LA and I said, well, okay, this is my opportunity though. And Wound up getting married early, but also bought my first home at 19, went to college, and because of the fact that, Arizona in terms of a global playing field, or actually, domestic playing field, was a lot easier to start a business and succeed than it was to compete in LA at that time. So
Right.
I wound up staying out there for 20 years before eventually moving back to California.
Was there somebody that saw something in you
Yeah.
academically that was able to say, hey, wait a second, was there a leadership that was provided that got you at least to start to believe, hey, there's another life for me outside of that?
Yeah, I wish, Jason, I get asked this question a lot. Who was that person or mentor that did it? And, I'll just be honest, and that's why, my faith is really what I always point back to, because the truth is I shouldn't be here. I shouldn't have done the things that I've done in life. And I just, at the end of the day, whatever you believe in personally, I can't do anything but point back to God. That being said, there was one situation when I was 16 years of age, kind of this big riot went down. Police came, and at that point in time, everyone hated the police in my neighborhood. Yeah. You don't talk to the police. It was one of those things, as a kid, you were profiled. I started driving at 16. Pretty much every time you got pulled over, which was just about 2-3 times a week at that period of time, because they would label you a gang member even if you weren't.
Right.
You were pulled out at gunpoint just to do routine checks. And this would happen. This just became a period of time to where you could understand why people didn't like them. But, I always looked at it as like, I think these guys are just doing their job. Yeah. Even at that age, right? They're just doing their job. And I had one...
They don't want to do it either.
Yeah, exactly. Yeah. I had one police officer who pulled me aside one day and said, I don't know what it is. He had a few different interactions with me and said, you need to get out of here. Like, you're way different than these kids. You got a much bigger opportunity, but the only way you're going to do it is to get out of here. And that was at 16, and that just kind of resonated to me. And that was the first time anyone in my life had really, because everything was the opposite. Like, you're not going to be anything, you're garbage. So it's just really having somebody say something positive to me that all of a sudden it's like, yeah, maybe he's right. Maybe I can. And I would just start looking around like, yeah, I am smart. And so at 18, when that opportunity came up to go to Arizona, again, I didn't have money so that they would pay for my school. I said, okay, this is it. And I got out, and from there in, like I said, it was just, my whole view was, like I said, I grew up poor, but, we talk about this a lot now, this, generation and people are, obviously I wrote a book called Close Your Wealth Gap. So the wealth gap is kind of widening, and there's a lot of hatred for the 1% or whatever it is. And a lot of those things are justifiable. But I always looked at it as, okay, this person's got a yacht or a business or a penthouse in New York or whatever it is. He's got 2 arms, 2 legs. He's got the same opportunity that I have. My path might be different, but I always believed if I worked hard enough and found a way that I could get there. And so I'm probably not on a path to be a billionaire, but for first generation where I'm on a path to be, I'm pretty proud of that.
Yeah.
And so, that's, kind of the thing today. I think mindset, opportunity, it's not really where you came from. I think it's your mindset of where you believe you can go. And that's really what I try to get to people. I know you work with a lot of people young enough just to rewire their thinking, but also understanding, I think, in today's day of Instagram, Twitter, and all those things, that success doesn't come overnight. No. Mine definitely didn't. In this business, probably the first 10 years, I hardly made any money.
Right.
Because I was always playing the long game. And I think when you do that, though, it does come eventually. And the best thing about it, it's sustainable when you get there. You don't have to worry about someone taking it away from you overnight or losing it.
It wasn't a get-rich-quick type of thing.
Was not. Yeah.
And I think the mindset conversation is really important. I had a friend of mine that I went to college with, high school with, comes, he brings his kid. His kid's 23 years old, and he's kind of lost, right? Yeah. And I said, what do you want to be when you grow up? And he goes, well, I'm not really sure. Mm-hmm. And he says, I think I really like research, and I want to work in a research lab. And my challenge to him is, I said, no, you don't. You just got to stop saying that. You want to own the research lab. Mm-hmm. It's okay if you want to do research.
Yeah,
but
right.
How do we change that dynamic? Like, what made you? You're worthy of doing more. Yeah. Right? Yeah. That's all you got to do is decide in your head, which sounds like what you did, is said, I can do more than this. I can be way more successful than this. If that person can do it, so can I. Yeah. Right? But it just required you to shift your brain a little bit. So you get into college. Did you apply and got financial aid? Is that how that worked? Or how did you?
Yeah, I got a partial scholarship to wrestle is what I was doing.
Oh, okay.
Yeah, did wrestling. I wound up tearing my rotator cuff, so that didn't last too long. So wrestling didn't really work out, but that got me in there. And then I wound up getting some student loans to wind up finishing it. Took me about a long period of time to do that.
Super
6-7
senior,
years.
right?
I was working full time. Not more than full time. I actually had 2 jobs all through my undergrad.
Yeah.
So it really wasn't until I went to grad school that I was able to focus on just being a student.
Yeah.
But did that, and then like I said, I started working as a stockbroker trainee for Waterhouse my sophomore year in college in Arizona.
So sophomore year in college, was it an internship type of thing, or was it just
It was a paid internship,
Yeah.
but it was one of those things where at the time the Series 7 was kind of what everybody had to do, right?
Right.
So they kind of put you into the class and they give you 90 days to pass your Series 7. My undergrad, I was a psychology major. Really what I wanted to do initially, being where I came from, was I wanted to work with kids and kind of help them. That's really what I wanted to do. And just without getting too long into it, I was actually working at a facility in my first year in college doing that. So I had a path to become a psychiatrist when I finished college. They wound up losing their license over some different things. And so I was unemployed. I needed to work because I owned a home at that time at 19 years of age. So I saw this and I just kind of figured, stockbroker sounds good. They probably make money. And it was really, I'd like to say it was a lot more calculated, but that's basically what it was. And then, I'll tell you, Jason, I showed up and they put the Series 7 stuff in front of me. I was like, okay. And it was like and they put you kind of through this training program, half day, and you work half the day at the time. People would call up, getting quotes, scanning stock certificates. Again, I'm 51, so all that stuff. This was just kind of when online trading was starting. But then it got to options, right? And I was like,
fascinating.
Well, no, I was scared as shit. I was like, I'm never going to get this. Like, this is not regular math, right?
No.
Puts, calls, like I was decent at math, but no, I don't. And my whole thing was, if I do not pass this, if I do not get and if you look at the Series 7, options were a pretty big part of the test. And so I just like buckled down. I was in the library. I was reading. At the time, you really couldn't do YouTube at all. Yeah. So I was getting every book that I could on options. And the short of it is, 90 days later, I was one of, actually, most people didn't pass it. It was like only 40% that passed on the first attempt. They wound up getting rid of those people. I passed it, and I wound up getting 100% on options, and wound up becoming an options principal for the firm. About a year or two later. So that was kind of my path to where, okay, I'm really pretty good at this. Mm-hmm. And then because of options, wound up becoming a risk analyst and doing something instead of the fund. Yeah.
So I have found that a lot of your pathways that you end up doing have to do with the people that you surround yourself with.
Yeah.
So now you're all of a sudden you go from being in a tough neighborhood to being, all right, these are quote unquote stockbrokers. Right. Probably interesting people to you, coming from your background. Now do you start to see your future differently, and what does that look like? So where do you start to see and go, why did you go to be a credit analyst or an options principal? How did that surface for you?
Yeah. So it absolutely did, because I was exposed to things that I never saw before. Yeah. It was the first time that I saw someone write $1 million check, right? Or I saw $1 million in an account or any of those things. And so, a lot of it was when I was working at the branch there was just having conversations with people that were coming in and being exposed to different things. And someone, when I remember one of the biggest clients there, he was just we talked about this last night, wine collector, right? And he said something in a conversation about first growth wines in Bordeaux. And I was like, what the hell is it? First growth. So I just started doing a lot of research on it. Then wound up going out. I spent 2 weeks in Bordeaux going to all the first growth wineries and really immersed myself within it. And then what that did was just give me commonality with some of the people. Even though I grew up completely different, like people don't really care. When you're an expert at something, you become really good at something. I started learning about trading wine futures and creating value in those conversations of things that people like him didn't even know about. Then that opened the door to exploring more. And then he was probably worth close to $1 billion at that time. Invited me out to dinner to his house, and then he started asking questions, learning about automobiles, watches, all these things. So you're able to me, I'm just, and it doesn't matter someone's net worth. I just love people who are passionate about things. And so if I get into something for good or bad, we talked about doing podcasts. I'm probably paralysis by analysis. I do so much research. Yeah. I just really, if I'm going to do something, that's why I don't golf. I just don't have the time to be good at it. I really want to be good at it and be able to, share my value with somebody else. And so, and it kind of dovetailing and working with high net worth people is really just kind of being able to have conversations with them about things that they care about and be able to provide value in those conversations.
So is it because of your preparedness that created your confidence? Because that can be nerve-wracking. I remember with a 22-year-old kid seeing my first $1 million statement. Like, whoa, my God.
Yeah. Well, you know what, Jason? Also the thing is, you hear a lot of fake it till you make it,
Yeah.
right? And I think there's, in this industry in particular, I think there's some of that, right?
Yeah.
Because if someone's going to give you some money, you can't really show up in a 1995 Oldsmobile Cutlass that's broken down. That doesn't mean you have to show up in a Lamborghini though either, which I think so. You have to project a certain level of confidence. So I would say, people ask me, did you fake it? Do you make it? Or do you believe in that? I would say I probably did. I was driving a 3 Series BMW that I probably couldn't afford. My first suit was a Canali suit, which it probably should have been a Boss suit, right? So because I'm a big research person, and so I did those things. But what I'll also say is, I never bought my own bullshit. I realized I didn't deserve that car right away. I didn't deserve that suit. So to me, it was just a path of how fast do I get to where I could deserve it.
Right.
So that was really spending the time, no shortcuts, learning every day, and to where at the beginning, also surrounding myself with a team of people. So I was always working with people who had 15, 20 years experience, were really good. So I was at the first years not selling my own expertise because I quite honestly didn't have any.
Right.
I was really selling the team's expertise. And by doing that, allowed me to be in those conversations with senior advisors and accountants and attorneys. And so it was really a great learning process for me. And then I would say after about year 11, 12, and it really did take that long, it's okay, I got this. And then it got to a point where it's I'm actually maybe better than some of those people.
Right, they're not doing anything more different.
No, and at that point in time, like I tell people, it's unless you're a sociopath, the hardest person to sell is yourself, at least for me, right?
Yeah.
And I knew at the beginning, I didn't know, shit, this guy's going to give me $1 million. I'm not going to lose it, right? I've got one opportunity. I'm going to surround, even if I'm taking 10% of the compensation and everyone else is getting 90, I'm going to learn, and that's enough for me. And so I never put myself in a position where either me or the team involved wasn't the best at the table. And so, but eventually over time, through repetition, through being around the right people, through practice, I started to say hey, I am pretty good at this. And I would say at that point in my career is really where it took off, because I felt hey, I can be at the table with anyone from Goldman Sachs or Blackstone. Now, we might have a difference of opinion, but no one's going to be able to objectively say this guy doesn't know what he's talking about.
Right.
And that's really when I think when I could sell myself and feel confident and comfortable in those rooms is really where things started to take off.
And there's really a lot to unpack right there, because when you talk about an entrepreneur, right, a lot of times people are good at something and then they decide to go start a business.
Yeah.
But a real entrepreneur really doesn't have all the answers. And you didn't have all the answers. What you did is you surrounded yourself with people that
Still don't.
That's called maturity, right? At a certain point, you're shit, I don't know anything. But you surrounded yourself with a bunch of people and said, hey, I'm willing to give up a little bit for the opportunity to learn and develop to the place where you're all right, now I have what I need.
Right.
And you're being opportunistic to take the things that you need to legitimize yourself, which ultimately ended up helping you scale your business. So you get to this place, right? You get to this, I can do this on my own. What does that look like? Do you part ways with them? How does that just take off from there?
Yeah, and you said a lot right there. So I think, a couple of things. First of all, since we're talking to, a lot of younger people also who are looking to be entrepreneurs, I think value is not always an absolute dollar amount, right? So if you're going to get a job for $100,000 versus $50,000, a lot of people are going to go and take the $100,000 job, where that $50,000 job might be exponentially more valuable in terms of the clientele that you're going to get to work with, in terms of the people that you're going to be able to train with. So going back to that idea of long-term value, it's really understanding, and I'm, even today when I work with clients, the place I start is, what is your North Star? What is your ideal lifestyle? Where are you trying to be? When I'm consulting with people on their career, if you could do anything you want, what does that look like? If we start there and then we reverse engineer it, that helps us from day one to make the decisions that get us quickest to that goal, right? And so not every job is good, not every client is good, not every paycheck is a good paycheck. And in terms of being an entrepreneur, I never really desired to be an entrepreneur. It just kind of happened to where that was the only opportunity I had to do what I'm doing today. I actually left Waterhouse and I went and worked for a hedge fund. And I worked for a hedge fund as a risk analyst. It was primarily a fund of funds managing money for other investment advisors. We didn't have any retail clients. This was in 2000. And what I started to see is eventually I was kind of in charge of everything for the company. It was a very small firm, about 6 people. Most of it was a lot of nepotism, 3 family members that lived there, that worked there. And then what happened was during that period of time was a dot-com crash. And so a lot of our hedge funds that were clients, RAs, weren't hedged. We ran a levered buy right strategy, which just basically means the portfolio is hedged, so your downside is calculated, so you kind of know worst case scenario. However, most hedge funds don't do that, even though they're called hedge funds, and so a lot of them were tech driven, started blowing up. We started losing a lot of our clients, and so I saw this at 25 years old, 26 years old. I was like, wow, this doesn't look good. The person who started the fund was worth a couple $100 million. It was almost kind of like a plaything. Didn't really care. And so I was like, but I cared, right? Yeah. And I was
Your name
worried.
is on it.
Exactly, and I needed to pay my bills, and so I said, hey, his name was Mark. We had actually a AM radio show at the time, where it was primarily Mark, where he would talk about the markets and everything. And so what started happening was we started getting all these calls. Hey, will you, during 2001, during the crash, because people couldn't just throw a dart anymore and say, hey, could you guys manage our money?
Right.
Mark didn't want to do any of this, but I said, hey, Mark, let me set up, because we were only dealing with institutional clients, the RIA to deal with retail clients, and I'll figure it out. I'll get us licensed. I'll put the compliance program. And he's begrudgingly like, hey, if you want to do it, fine. And I said, hey, just at the end, let's work out something on a partnership that I get a percentage of that business. Short of it is I took a year, knew nothing about it. The fastest designation was the SEMA, which kind of got me over the program that was through Wharton at that time, which opened me up to Ivy League, which I wound up becoming a fellow eventually and everything like that. But there was another level. I was like, wow, this Ivy League education, that's a lot different from state schools, right? Wound up becoming really close to Professor Jeremy Siegel, who wrote Stocks for the Long Run. Was a great relationship that led to others over a long period of time. But the short of it is, took me about a year of literally, this isn't like walking through the snow without any shoes, but 7 days a week I was working to get this up and running. So got it registered, put a financial planning software in place, got performance reporting in place, found a retail custodian, like everything you would need to do to get it up, and then created a program to bring people in off the radio into our office to do kind of live courses of how we manage money and then converting those into paying clients. And we brought in about $22 million in the first 6 months.
Wow.
This is back in 2002. The short of it started doing really well. Then I went back without any written anything and said, hey, Mark, can we have that conversation about partnership? And it was just kind of get strung along. And it was eventually realized like it was never going to happen because I was actually becoming a bigger part of the business, which his son got involved with during the time. And my dad was 57 at the time. I was 26, 27, wound up just having a massive coronary, drop dead, passed away, which, I didn't have the greatest relationship, but we were just starting to build a relationship. I hadn't seen him for years at that time, so it was a little difficult for me, but the most difficult thing was coming back into, I took 2 days off, into an office with people who I didn't trust anymore. And I just, I said, you know what, I didn't know what the hell I was going to do. I gave him my 2 weeks notice. I had one client that I had just was bringing in that hadn't signed up yet, which was like $500,000 client. So it's like $5,000 a year or something like that. I said, hey, will you come with me? I'm going to do my own thing. So it's going to probably take me a couple months to get it up and approved. He did. And I started out as my bedroom. I started my own RA because I didn't know what risk was at 27 and built it to almost $1 billion firm over 20 years. Wow. Just kind of grinding.
How did you even know at 25 years old? I'm just trying to think back then. I'm like, what is an RIA? I wouldn't even know.
Well, it's because I had set it up for them. So I spent that previous year researching, doing it for them.
Because he wanted you to do it. Because
he wanted me to do it. Well, I wanted to do it, and he gave me the opportunity to do it. So, again, even though everything, like I said, God puts things in your path for a reason. Right. Everything happens for a reason. So even though I say, hey, the guy screwed me or whatever, I don't spend any time on stuff like that. Whatever it is, I learned a very valuable lesson from how you do business with people, what type of business you do with people. And I got a year to learn how to build an RIA that somebody else paid for. You don't learn that in college.
No, the second time you did it was probably a couple months.
A couple months. That's all it took. And I just basically took everything that I did and I did it there. And now I built another one after those 20 years. And so, I can kind of do it in my sleep now.
Right. So now you start your own RIA, which is and you're by yourself. This
Yeah.
is different
I did everything. Yeah.
Yeah. Like you're like, okay,
one person.
I'm at my kitchen table and I'm going, all right, let me go file the SEC paperwork.
Yeah. Well, you state register at that time because until you get, I think it was 15 million at that time. So I had to state register with a bunch of different states.
Right.
And, oh yeah, it was, dude, I was doing everything, man. I was in networking groups to try to get clients. I was doing the trades. I was doing the investments. I couldn't afford FedEx, so I would get the applications and I'd wait in line at the U.S. Postal Service because it was like, dude, I literally did.
This is the greatest story ever, right?
There's nothing within an RIA firm. That's when people come to work for me and want to tell me how hard or how long. I know exactly what your job is.
Exactly. Awesome.
So I did everything until I could afford to hire my first assistant. And you kind of start to go from there.
That's great.
Yeah.
So then you basically, so how do you get clients? You just network? Like, how did you build?
Yeah. So the biggest break, quite honestly, is I got into a networking group. I don't remember the name of it. One of these things
BNI or something.
Yeah, it was something. It wasn't that, but it was something like that, where there was like one financial advisor and one candlestick maker or whatever it is. So I was the financial advisor in there, and then there was a CPA in there also. And so if you, as a financial advisor, CPAs tend to be your best source of referrals that you get. I would say probably better than anyone else because they know the client's finances, they're a trusted advisor, and so if they tell their client to go and talk to you, you have a pretty good opportunity to bring them in as a client. So I met him, and he said, you know what, I'll give you a chance managing my stuff first, and if you do a good job for me, then I've got clients I could refer to you.
Oh, that's good.
So it's pretty self-explanatory. You do above and behind.
Oh, yeah.
See, this guy calls, you do it. So I did a really good job, and then he opened the door to other referrals, which, within the first few months was my first $1 million account that I brought in, 20-something years old. That was pretty exciting.
Yeah.
And then, it just kind of took off from there, and which led to more CPAs and more attorneys. And the business that I sold, I would say, some of it came from traditional media, being on television leads, but 95% of it was from referrals from either attorneys, sports agents, other clients, or CPAs.
So was it all networking for you?
All networking. Okay. Yeah, That's how I told Coach, man, I really like you because I don't go out to dinners anymore. We went out to dinner last night anymore. And I said, I did that for so long, dinners. And there's a reason for a lot of reasons, my first marriage didn't work out. But I was just 100% in work, and there wasn't a place I wouldn't travel to or a meeting I wouldn't take. It's just kind of what it took to. Right. So there's a lot of sacrifice, and some of them weren't the right meetings, some of them were, but it was just activity for me, so a lot of networking.
Did you know, so how did the trajectory go? Because I think about when we started FFA, it was kind of like a slow burn. Yeah. And then it just kind of took off. Yeah. How long did that period of process take? Yeah,
so the first 10 years was a grind, man. And, I went through a lot of stuff. So we started it in 2002, and then 2008, 2009 came, and that was brutal, right? That was rough. And then really, and I think in 2009, it was one client that really, I think, helped me out a lot. His name was Levi Brown. Still a client of our firm today, actually. He was a player for the Arizona Cardinals. Mm-hmm. He signed a $62 million contract, which at the time was the highest ever for an offensive lineman in the NFL. It was 2008, 2009. And wound up getting written up, Sports Illustrated. We were on the cover of the Arizona Republic at that time. So that kind of got out there, and that kind of opened the door for things to working with more athletes. And then people were like, "Oh, if he's working with a guy with $62 million, maybe he'll work with me also." So then it kind of changed from, they talk about chasing versus attracting. And that was kind of the thing for me, that all of a sudden it was like, okay, now people want to come and work with us, and we can be a little bit more discriminative of, okay, because your time is limited, who we work with and who we don't. And I think from there, that was kind of the thing that set it off. And so when I would do TV every once in a while, all of a sudden it was like, if I want to do it every week, I could do it, because it was either CNBC or Bloomberg. Yep. So just exposure, like anything else. You could be the greatest at anything that you do, but if nobody knows about you, it's not going to work. And then obviously having third-party validation and all those things help. So that's really kind of what helped me.
Did you hire a media firm to help you get into the...
It's a great question. So I co-authored a book while I was in college with one of my advisors at the time. I won't even tell you the name of it because I'm so embarrassed. My last one was by Wiley. They called me, and so I'm really proud of that one. But the first one, and I had very little to do with it. But the old advisor was like a partner initially I wound up buying out, said, hey, we're going to hire this firm for 90 days, and they're going to do some PR for us on the book. And so we're out in New York. We're supposed to be talking about the book, and the PR agent says, hey, I don't know if this is something you do, but are you comfortable talking about stocks? Fox Business has a thing. I'm like, well, of course.
Yeah.
I'm comfortable.
Yeah, absolutely.
And so my first time on, most of what I do is remote, like a studio like this, and we broadcast through New York. So we go into New York studios in Fox on Avenue of the Americas over there. And so internally, I'm completely intimidated, but externally, I'm like, yeah, I got this.
Right?
Yeah. So I show up on set, and it ends up being like a 40-minute spot back and forth with different. And at the end, the producer comes up to me and says, like, what shows do you normally do? We want to get him like, this is my first show. I had to be honest at that point. She's like, we want to have you on consistently. And so she reached out to me. So I had this contract with the PR firm. The short of it was, what I found out towards the end of the contract was they were actually getting calls for me, but because they had other clients, weren't sending them to me. And so after 90 days, this was,
that's crazy.
20 years ago. Yeah, we wound up getting rid of them. They're not cheap, PR firms. And I just wound up being my own PR person, and wound up working okay for us.
That's awesome.
Yeah.
That's a great part. Welcome to Take the Power Back. If you're a student or recent grad looking not to have a career handed to you, you're in the right place. The first and really valuable section inside Take the Power Back by joining the movement is really the inspiration that you get by watching the podcasts of young, successful entrepreneurs that have bet on themselves, that had opportunities in order to be able to take jobs with benefits or $50,000 a year salaries. But what they did is they said, I'm going to pursue something bigger in my life. Entrepreneurship, leadership development, sales, marketing, real estate. And with the amount of inspiration that you can get by actually watching other people that have had success, start to give you a vision for yourself for you to be able to achieve greater things in your life. Let's dive into it. Why did you decide to sell?
Yeah.
How did you know it was the right time, or do you know if it was the right time?
Yeah, it's a great question. So ultimately, the business that I started at 27 versus what I realized in my late 30s, I had 1099 people. I had different things to where I couldn't have all the consistency I want. I couldn't deliver everything that I want. I had cost structures that were embedded in there. I had payout schedules to advisors that weren't really, at the end of the day, the best way to build and scale a business. But it's just, I needed to be profitable from year one, which I was never not profitable. So the business, that I'm building today, we projected not to be profitable for the first 3 years, right? Because the Amazon thing, like, we're building the future. So you have to make those investments, where I couldn't do that at 27. I had to be profitable. And so ultimately what wound up happening is I just realized, like, with the industry changing, there was just so much disruption to where I would just look at it and say, like, I'm really easy to put myself out of business. And unless we make some changes, that's going to happen. And so I went back and did my MBA in my late 30s. And the idea being kind of, how do I build and scale this and exit? So the reason I did my MBA is I also realized I had to do one of two things: either sell, merge with someone larger. And I didn't want to be like this peon. So I wanted to make sure that I had the credentials on paper to be part of the C-suite, if that's something I chose to do. So I went back and did that, came out, and actually right away I was like, okay, got my MBA, I've got this business, and I've done all these mergers and acquisitions and private equity classes, but the best thing is, I know from experience is experience. Let me put it up for sale. And so I talked to a couple people, and I guess I could say his name, Eric Wedbush, if you've heard Wedbush Securities, was a UCLA alum. I came out of Anderson. Okay, I want to talk to Rob. And the short of it is, I got to a lunch meeting where, after 6 months of due diligence, I was ready to sign to sell my business to Wedbush, and realized that they put something in the contract that we talked about multiple times that wasn't supposed to be there.
Yeah, that's I was going to ask you some of the learnings you have.
And back to that light bulb popping in my previous situation of not being able to trust people, I just walked away.
Oh, you walked away from the deal?
I just walked away from the deal. And which was great, because 3 years later, I had an unsolicited offer. People came to me. So the company was CI Financial out of Toronto. And again, one thing I say is that everything good in my life has happened because of a relationship. Yeah. Conversely, everything bad in my life has happened because of relationship.
That knife cuts both ways.
It does.
It really
and I
does.
talked about going to Wharton, meeting Professor Jeremy Siegel, He was involved with an ETF company called Wisdom Tree, which was one of the first fundamentally weighted ETF companies. So he was involved with that. Asked me to be on the advisory board of Wisdom Tree. Did that. Who also was part of Wisdom Tree was a guy named Kurt McAlpine, who eventually was recruited from CI, youngest ever publicly traded CEO, I think was 39.
Wow.
When he needed to expand into the U.S., he said, I know the guy to go to, I know the firm to buy. And so we were the first acquisition of wound up being close to $200 billion in acquisitions over a 5-year period. And so wound up selling to them at, I think, the third price that they offered me.
Okay.
Saying, first one, tuna, then third one, then they said yes. I'm like, I probably didn't ask for enough.
Right,
But, the major thing was, Jason, I knew it wasn't the firm that I wanted it to be. I knew I could be so much more. And I didn't know whether or not I was going to stay there and build within that. Ultimately realized just big publicly traded companies is just not who I am.
Right.
My vision for what I wanted to create, which we're creating now today, was not going to really be possible within there. So thanked him for the opportunity, walked away, took a couple of key people, which I didn't know what the hell we were going to do at the time, but said, I've got probably enough money to take care of you guys for a few years while I figure it out. Right. I did a carve out for a non-soliciting with them, took a little bit of a pay reduction, and they came with me. They're with me today, and we started building something again a couple of years ago, which is doing really well.
So how old were you at the time when you sold?
I was. It was 2019 is when we signed the deal, so I was like 44.
And then you stayed on. They made you do
3 year. I had a 3 year.
deal.
Earn out.
Right.
Yeah, you know how those things work.
Yeah, I do.
So and then I had another year where I couldn't actually compete in the high net worth space until the middle part of 2025, and so I just spent a couple of years one thing I did was I said, hey, if I get back into that space, one of the biggest my whole thing now is how do I build something scalable,
right?
That goes beyond me, because a lot of the first business was very reliant on me, and so I didn't want that to happen. And so one of the things I said, if we're going to work back with high net worth people again, one of the things that took a lot of my time was family education. So educating, the immediate family, but also second generation, because the statistics about wealth, it just gets lost.
Yeah, it gets lost.
So I said, hey, if I can create something, we created this Wealth Academy where we do online meetings once a week. We have a library there of things, and we teach people entrepreneurism and investing, essentially. I said, this is something I can plug 1,000 people into 2,000. So if a family comes on, we could have their niece, nephew, whoever it is. So we started that. We started to do really well, but out of the need for that, people then said, hey, can you help me launch a business through consulting? And so that's kind of where everything evolved. But yeah, we did that. And then ultimately what we really wanted to do was take kind of most of what I did in the last 10 years of my business. The firm was called SureVest that I sold, was working with family offices, multifamily office type of stuff. And we said, hey, how can we create that same thing for entrepreneurs, but get to them at an early stage versus post-exit where they did so many things wrong? And so we kind of created an ecosystem. It took me 3 years to figure it out, to solve for that, and that's something we launched 2024.
So I get this question a lot from people about, how do I move up market?
Yeah.
People ask me all the time. They said, how would I attract you as a client?
Yeah.
And I don't really have a good answer for them.
Sure.
Because traditional wealth management doesn't really foot the bill.
Yeah.
Right. So how is it that, because you've been able to do this multiple of times.
Yeah.
What do you think is different about your approach and or value prop than somebody who struggles in that marketplace?
Yeah. I always, whenever someone asks me something, first of all, I feel a huge burden to make sure that I give them information that doesn't waste their time. And I think, or else I'll say I don't know, right? Because I think time, as you know, as you start to accumulate a certain amount of wealth, is your most valuable asset. And so the whole reason you pay for education or mentorship is to shorten that time span in which it takes to create success, right? So when someone asks me a question like that, I really have to think about it, and I start to think about frameworks. And the truth is, it is a lot of hard work, and the truth is, it is a long game. But when I think about what are some of the things that help me recognize that, I'll give credit, and I know a lot of people steal his shit, which I don't like. Have you heard of Dan Kennedy before?
I have not.
So big marketing sales guy. Dan's probably in his 80s now or 70s. I'm sorry, Dan, if you're younger than that. But
you look like it anyway.
Yeah, I heard something from him. He must have been in his 50s, 60s, in my early 20s from him, where he had something called the ACE strategy, ACE, which stands for authority, celebrity, and exclusivity. And sometimes, like you just could hear one, like 20 people could hear the same thing, 19 do nothing with it.
Right.
But one person takes it and really tries to understand and dissect it and like, what does this really mean and how do I apply that to myself? And so the idea was what he said in terms of the people that are most successful is first you have to become the authority at something.
Right.
And that's usually what takes the longest, right? That's the college degrees, that's the internships, that's the late night studyings, that's the years of experience to where you can't just get that by setting up an Instagram page. Like you have to really put in work to become the authority. And so back to our thing where you can be the best at something, but the next step is somebody needs to know about you. The people need to know about you. So then his next step was then you need to become the celebrity, right? You need to have people know about you. And so how do you do that? Things like authoring books, things like being on television. Today, what I would say, though, for your audience, it's so easy because you've got Instagram and you've got Twitter and you've got LinkedIn, which is much easier than getting on network television.
Right.
And I'll tell you the truth from someone who's now done both, way more impactful. I'm on Fox Business still as often as I want to be. I don't go on CNBC anymore because they don't like me for doing so much Fox. But, people occasionally come up to me like, hey, I watch you on Fox on Charles Payne's show. Oh, okay, cool. Yeah, nice. So many, I was just last night when I left your place, I stopped at Whole Foods to pick up something from my wife. Someone's like, I love your Instagram. I get more of that.
Really?
Yeah, or your YouTube channel. So you're able to do that now yourself without those barriers. And the difference between traditional media and social media, there's immediate impact. They can set a meeting with you. They can go to one of your webinars. And so that celebrity is then, okay, now I'm really good at something. Again, you got to put in the time and effort and energy to get to the point where I was like, okay, it took me 10 years. Maybe you can get there a little quicker, but I'm really good at this. Now let's let the world know about it. So why did I write that book? Why did I get on television? Yeah. All the thing is to be able to let the world know about it. And he says after you do that, it then leads to exclusivity, where then it's the attraction marketing. People are coming to you. It's more exclusive. You don't say yes to everything. You work with only the people that you want to work with, the people that, because the things I did, quite honestly, at my last firm, there are a lot of great things, but if you're making $50,000, $100,000, like it's not going to do anything for you, right? It doesn't move the needle, right? So yeah, just invest in an S&P, like do those things first, to where I really needed to take what I was doing towards people who I could reduce their tax bill by a few $100,000, right? I could protect their children from estate tax. So there was the strategies and knowledge and expertise that I had really didn't resonate with everyone. So the exclusivity of my knowledge and impact and really started lending itself to people who could pay six-figure asset management and consulting fees, and that's kind of where it went to. So to give credit to Dan, that's where it came from. And then I added a D to my own, which is delivery. Because, authority, celebrity, exclusivity, but if you're not delivering, and that means sometimes with these high net worth clients, still you saw me, I didn't take it last night, but I texted him right away when I get a call from a client. Hey, I'm at dinner. I'll call you right after dinner. Okay, no, call me in the morning. Like, I'm going to get to them right away. Yeah. So even today, I don't probably have to be doing that, but I don't know any other way. So you have to understand what is the mentality, what do they need? Again, being time. They're coming to you because you're trusted, you're going to save them time, and they feel and know that the information and advice that you're going to give them is going to get them to where they're trying to go faster and better than anyone else. Yeah. Unless you can say that, you're probably not going to win in that space.
Yeah, and that's interesting because, the traditional model, as your net worth grows and as your investable assets grow, for me, I become less risky.
Yeah.
And there are other people who become more risky.
Sure.
Right, and everybody's in between. But the thrill of that, the pain of losing versus the thrill of winning, is, doesn't outweigh it for me personally. Do you find that there's a difference in the decision making of people as they get higher net worth or more investable assets? Yeah.
I think there's a lot of books out there and a lot of people that put on webinars about working with high net worth people, and I think most of them are bullshit. High net worth people, at the end of the day, my first degree, remember, is in psychology, so I spent a lot of time in the behavioral side of investing, the behavioral side of sales. And at the end of the day, they're people. And so what's important to them, their risk tolerance, like all those things are completely different. Yeah. And so you really have to do two things. Like, first of all, spend the time getting to know them, right? Everything that's important to them, not important to them. And I think at this stage in my career, it always wasn't that way. But I think for it really to work long term, you have to, I don't want to say you have to be best friends, but you have to have mutual respect for them.
Right.
You have to be, like, if I'm talking to somebody, if I'm not interested in them, I can't learn from them, I'm probably not going to be a good fit for them. And the truth is, it could be someone who has a plumbing company or sold a product. I don't really care about that because I could find common ground with somebody. But I think you have to become invested in them. And when you become invested in them and you care about them and there's a mutual respect, you know how it is. Like the person that's always complaining you don't like, guess what? They think by being loud and complaining they're going to get the best service, they get the worst. But the people who appreciate you, you appreciate them, they're the people who are going to be up late Sunday night doing some research on something for them. So I feel like when you get to know them and understand them and you become invested in them, genuinely invested in them, that's when you start to do better work and things take off. I don't think there's any pattern to that other than understanding who they are, caring about them, investing in them, and then making sure that you have the skill set to solve their problems. If you do not, at the highest level, surrounding yourself with the people, being a resource to bring the people who can solve those problems for them.
So you've worked with a lot of high net worth people, right? A lot of athletes, right? Other than athletes, what are these people? Like, is there like a common denominator of, young people that are looking at this saying, you know what, we're talking about managing their money, which is like kind of ballers, right?
The
Rock. But what is the common denominator, and what do you see with these people?
Yeah, well, first of all, I think it sounds really attractive. Let's work with athletes, right? Again, it comes back to people.
Right.
There's athletes you want to work with, which are people that you want to work with, and there's absolutely athletes you do not want to work with. And again, so you can't make a blanket statement. Now, obviously, the thing is, if you're working with top-tier athletes, there's enough money on the table to be able to do a lot of things for them to make them a successful client. But going back to mindset, I talked about Levi Brown as the first NFL client that I got. He was interviewed. I was small. I was in the back of an accounting firm at that time. I had maybe 70 million AUM, 80. It was very, very small at that period of time. He was interviewing with Morgan Stanley and Goldman Sachs and Merrill Lynch. And I wasn't really a huge football fan, and the first thing when I started researching him was a Sports Illustrated article of NFL players, like I think it was like 78% are bankrupt within 2 years of leading the league. So I was like, shit, well, sounds great, but if I wind up getting my name tied to that, I'm done.
Right.
So at the end of the day, when he came in, my whole thing was about, hey, I understand you're interviewing other people. I'm going to be different from a sense that I'm probably not going to tell you what you want to hear. I found out his greatest fear was not being broke because he grew up broke. But I said, look, if you do what I tell you to do and you follow everything, you will never be broke. And so fast forward now, this was 20 years ago. He's got a home on Lake Austin that I think is worth $17 million now. That he's got no debt. His income, passive income, comes in. It's like twice of what he has more every dollar that he made in the NFL and then some. So again. Talk is cheap. When you have validation of what you've done with someone for 20 years that's willing to vouch and say, yeah, it's because I followed that plan and roadmap. Those are the things that help. But it's those types of things, again, in getting invested in people. So athletes, maybe. The vast majority of people are entrepreneurs or a lot of senior level executives that two of my bigger clients, I got out one who's a board member of mine now, actually. I took out of IBM after 25 years and said, you need to get in private equity, man, because you're kind of capped at, and wound up, I think he made in his first turnaround at his first private equity, I think he made in less than 24 months what he made in his whole career.
Wow.
And did it 3 other times in private equity, had 3 other exits during that period of time. So again, that became my value proposition. And what I would also say to that to people is, we talked a little bit about this last night, is you have to stand out in a sea of the same, where everything sounds the same. People are talking about their alpha and their like all this crap that people do not care about. And the truth is, and this is what I believe, I think we've got a great asset management team, but at the end of the day, so does Goldman, so does Morgan Stanley, and there's very little differentiation that you can make there for clients. But there's a lot you can do in tax, and a lot you can do in estate planning, a lot you can do in helping build and scale their business, and a lot you can do in educating the family. So I always focused on those things. So my win wasn't, his name's Lou. My win wasn't Lou's Atanasio. His win wasn't his portfolio. My win was, look at how, there's wealth management. Cool. We could all slap 1% on someone's hard work. But there's also wealth creation, right? Where I could show like, hey, he would have stayed here. Here was his trajectory. Here's an extra millions of dollars that he made because we helped him make this switch. And we've done it now for 12 other executives that we pulled out. So, okay, that's an interesting story that you could tell us. Oh, and we set up a family office for them. And how do we do that? They're just different conversations that I'm having versus what the guy at Morgan Stanley was, who came out of even if they're Ivy League, they came out, they sat there, they never built a business, they don't understand people, they're just kind of, or McKinsey, not to beat up on them, I've got guys that I did my MBA that work at both places, but unless you're an entrepreneur, unless you've done all these things yourself, there's a little bit that's missing, and I think people understand that.
I think that's a unique value prop that you bring to the table, is that you built a business from scratch. You exited that business. You've started multiples. You've created wealth yourself, and because of that, you actually understand what an entrepreneur deals with. And I think a lot of times the Morgan Stanleys and the Merrill Lynch's of the world, those types of financial advisors, go look at their portfolio. They don't have the money because they're working for somebody else's entity value as opposed to their own.
Right.
Not to take that away from anybody. You can sell your practice, but it doesn't mean you're an entrepreneur.
You're right, 100%.
So there's a difference between being a practitioner and an entrepreneur.
Yeah.
What's next? I asked you this last night, and you're like, oh, are you working towards another exit?
Yeah.
And you're like, no, not really, but what is next? What do you want this thing to become for you?
Yeah, so I think, again, the only thing I really know is this business. This is all I can do. I mean, maybe I can do other things, but this is what I do. I'm really passionate about it. The vast majority of the time that I spend today, so we've got a few different divisions. We have an RIA, we have an insurance business, we have a lending business, and we have a consulting business. And so most of my time, for regulatory purposes, you have to kind of divide all those. And so I actually stepped out of being an investment advisor. I've got other people who are able to do that. So I work with entrepreneurs and executives and family offices on strategy, right? On building your family office is what some clients I consult with. The vast majority, though, are entrepreneurs. How do we build, scale, and exit their business? How do we hire? How do we put scalable processes in place? Coming from the standpoint of I do have an MBA and MBA, all the academic and experience, but I'm also an entrepreneur, and I understand what it was in 2008 to put things on my credit card to get through so I didn't have to lay off people. So I work there a lot with them, and I love doing that, right? I love helping businesses grow, especially first generation people. Even if it's a $15, $20 million exit for some people, that's like life-changing, changing. And so helping them with those things. But really what we've created is this platform and ecosystem to where if you're just thinking about being an entrepreneur, you can come into our Wealth Academy. We can train and teach you how. Maybe you don't want to do that. Maybe you want to be an entrepreneur. And being able to touch everything in your financial life, from tax to consulting to asset management to estate planning to insurance, all the way up to, hey, I am building and selling a business and I need a family office today and help exiting that. You can come into us there, or you can come into us at the beginning. And like I told you also, over time, as you get older, you accumulate more wealth. And two things: when you sell a business, obviously you get a lump sum of money that is reduced after taxes and all those things. The amount of money that you have then has to be reinvested to be able to create cash flow, and it's very hard to replicate if you had a good business.
Right, it is.
You're not, so that's another thing is people need to understand what does that mean when you sell, because it's probably not the $3 million a year that you were making off of a $10 million exit, right?
That's right.
So you got to tell them that, and I try to get to them before the exit, to tell that to them. So there's that part of it. It's like, okay, if I sold today for X amount, where am I going to invest that? Because I know where this business is going and what the cash flow from that's going to be is one thing. The secondary part of that is, okay, I'm getting older now and I do need to hire my own team. So I'm really hiring the team of attorneys and CPAs and investment advisors and all those things that I want. Like I was telling you yesterday, my lead analyst, if I die, he runs my estate. That's how much trust I have in him for me. So I'm really kind of building this for my clients and everyone who's coming, but also myself. And so just a complete exit. Look, I'm never going to say never, but it's definitely not what I'm building for today.
Well, and like you said, you took a big exit, and now you've got to replace that cash flow in order to keep your wealth. Right. I think to a certain extent. I had a gentleman that I've become good friends with who has had multiple, and he said, Jason, you'll feel differently about all of the money that you spend when you actually don't have the cash flow that you have.
Yeah, no, it's exactly it.
Because I still own a chunk of the business.
Yeah,
right?
It feels different.
You're like, I'm spending those dollars.
People start to get worried. Whether it's athletes, they're used to these big checks coming in. Now they got a big lump sum of money, but it just psychologically feels different when you know you're pulling off the money. And it takes a while before they could see, Levi, if I just use him for example again, because a lot of this is public, it's like, I started showing him okay, you're going to be able to pull money and it will still continue to grow. He just didn't believe it. Yeah. And now, 14 years later, it's bigger than what he started with and he's sustained his lifestyle. I was like, okay, but it's very hard for people to get their arms around.
It's hard to get their arms around it.
Yeah.
So if you were to give advice, right, as
Yeah.
we think about, you know, this Gen Z
Yep.
generation, you know, you're the 51-year-old,
Yeah.
you know, Rob talking to the 22-year-old
Yeah.
Rob.
Yeah.
What advice would you give to if they want to make it big?
Yeah.
Right? If they would like to be very successful in their own right.
Yeah, I give him back Dan's advice, right?
Yeah.
Focus that first thing on authority. And I don't really care what it is. I think the great thing about today, you know, especially today maybe with AI, be a plumber or an electrician, but to your point, look at the bigger picture. How do I own one of the biggest plumbing companies? I mean, look at the governor of Tennessee.
Yep.
Lee Company's multi-billion-dollar company,
Right.
which is plumbing, and I just used them at my house the other day, and electricity. And so think about, how do I make this something bigger? Or the same thing as my daughter is more risk averse. She's not really an entrepreneur. She's getting ready to go to college, and so I've been for years now putting her on the medical path, where she's going to look to go to medical school. But the whole idea is, like I said, okay, honey, once you come out of there, let's think about how do we expand into your own practice.
Right.
But she's got to put in 8 to 10 years to get there. But if she starts at 18, then she's 28. I'm like, okay. So it's identifying, I would say, don't take too long. It doesn't necessarily have to be something you're passionate about. Think about something that you think you could be the best in the world in. You can create a valuable skill set. You can solve a problem better, faster, cheaper than anyone else. Go all in on that one thing and look at, how do I create my own business? And you don't have to be an entrepreneur. I was, just because no one ever gave me the opportunity. Had Mark have given me the opportunity to be an entrepreneur and have some people around me right away that could help me, so I didn't have to do everything myself. And, you know, like I said, I talk about Lou. He made a lot more money on his exits through private equity than I know a lot of entrepreneurs did in a lot faster time. But what I would also say, and I encourage everyone today, is to understand what it is to be an entrepreneur, to understand when someone hires you, what are their pain points, what are they going through? Because if you can come in, and again, just understanding who your boss is, who your client is, and go in there with the idea of, I could run all of this if I need to, within a plumbing company or within a financial company, you become exponentially more valuable, and you are someone who should be getting equity or something like that. Right. So focus on either getting equity through someone else as an entrepreneur, building your own equity, because equity is really where the multitudes are made of money.
Entrepreneur, I was going to ask you to define it, and I think you just did, but basically is that you go work for somebody, if you will, but you gain stock and equity in that company.
Exactly,
right?
exactly.
And that's where you talk about these, I always say there's two ways to become very wealthy. You become an executive of a large company with grants and options, right? Or you go start your own business 100%. And you take an exit.
When you ask me, I mean, everyone I worked with that has significant wealth, three things: professional athlete, rules most of us out. Entrepreneur, which anyone could do. Senior level executive, which sometimes can be harder than being a professional athlete.
Corporate athlete stuff.
It's tough. So it's really one of those three things. Right. If I point, or inheritance, which I don't have that option. So just knowing that, you got to identify your path early on. Which one are you going to be? And understanding, I've got a lot of friends who had an opportunity to be professional athletes. You need to cut that off. You're probably not playing arena ball at 35 or doing those things for $100,000 a year. So identifying that, going all in. Like, when people hear me talk about what I do, even to this day, they always point to like how passionate I am about it, and I am. I just love what I do. I don't want to be doing anything else. I feel like I'm the best in the world at it. If I'm not, I'm going to hire somebody to work with me that is, because I just want to win at all costs. Like, I hate losing, right? So I won't lose. Or like golf, I won't play because I know I'll lose. So I'm just not going to do it.
That's one way to not ever lose.
Exactly.
Well, this has been fantastic. I think congratulations on your success.
Thank you. Same to you. I mean,
thank you.
Yeah, I mean, you've obviously had a tremendous amount of success as well.
Yeah, so. We've been fortunate, and I appreciate you sharing your insights, because I think this generation has a lot more to give.
Yeah, 100%.
Than what we give them credit for. Yeah. And we just have to do is change that narrative.
And what I would also say is, back to what I was saying a little bit earlier. Don't always look for the highest paying or the quickest thing. It might be something that you are just spending time interning or working with someone like yourself, like someone to come in the insurance space, for example, and work alongside yourself and the people that you're putting in front of them. Like, for me, for example, I'm talking to you because of relationships. Correct. Right? Relationship equity that I have. I don't really, someone to pay me like an hour, it's not affordable, right? Because my hour is so valuable. But because of the things that you've done, the network that you have, you're able to put people in front of these kids at a very early age where they might have a higher payout or something. That's so short-sighted.
It is.
You want to go where the most intrinsic value of who's going to get you, again, where you're trying to go in 20, 30 years, the higher paying payout or one of those things where, trust me, that's not where it's at. It's the relationships, it's the knowledge, it's the expertise, it's the access to the right people, most of which sometimes you can't. Like, people call me all the time, can I take you to lunch, Rob? Can I take you? I don't want vacations. I don't want lunch. I don't want dinner. I'm only going to talk to you if I think this is something that's going to make me better as a person. There's really something I can contribute. So I would tell them, latch on to those things more than the highest dollar amount.
And I think that's just incredibly, because what you said is don't take the salary, take the value that you're going to receive from that.
Yeah.
And that value is not necessarily monetary.
100%. It's
the learning and the knowledge that you get from the relationships that you get, which will help you tremendously. And we both did this, right? You applied for a stockbroker job. They paid you a little bit of money, but that wasn't where you made your money.
Right.
That flyer that you took on yourself that said, I'm willing to work harder than the person next to me, ultimately led to all of your success. Yeah. And just young people need to hear that. I think they just got to say, I'm worth more than this $50,000 a year paycheck where I'm stuck in a corporate job where there's nobody around, and I'm like, a place. Most people that go into corporate America leave unhappy.
100%.
Right? Is that fair to say?
Yeah, it is.
Most people like yourself who pursue entrepreneurship are continue to be passionate and will probably be for the rest of your life.
100%.
Which is, very satisfying.
And what I would say, back to the point of knowledge, what I try to do for entrepreneurs today, what I didn't have someone to do for myself, is set up that framework the right way in the foundation from day one. So you don't do what I did, is kind of build a business of patchwork that eventually you realize, this isn't sustainable or scalable, or I hate this. I've got clients, and I have clients I don't like, but they're paying so much money, and I know if I sell, I can't lose this family office that pays us $500,000 a year because my multiple gets killed.
Right.
Or if I fire this advisor, right, who's a total ass, but has 200 million book of business.
Yeah, you're killing your
Don't
own
do that
multiple.
to yourself,
No.
because you'll eventually create your own hell.
Yeah, and how do you do that? How do you keep from doing that? Because that's a really good point.
Yeah, you got to find the right people who've been there, done it, and be willing to maybe just take a little bit longer road to get there, but set that foundation right up from the beginning.
So it's good to great. It's putting the right people on the bus.
Exactly.
As an entrepreneur.
Exactly.
Right?
Exactly.
I fired one kid one time, and he was a great performer. And we used to fight all the time, and we'd argue in agreement. And I said to him one day, I said, you just you occupy way too much space in my brain. Mm-hmm. You'd be a great producer for somebody else.
Yeah.
Right? And I like the person.
Right.
But he just wasn't worth it.
Yeah.
He just wasn't the right person on the bus.
Yeah, it takes maturity and time to understand that and see that not every dollar is a good dollar.
No, that's for sure.
Yeah.
Especially when you don't need it.
Yeah.
Again, thank you for doing this. I appreciate it.
Yeah.
Congratulations on all of your success.
Thanks so much.
Let's go for Take the Power Back.
Let's go. All right. Thank you.